Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Chahine.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Chahine and Dennis Dick. Lots of news to get to, not a lot of time to get to it, so let's just jump right in. We've got the earnings, of course, the banks, Goldman Sachs, Morgan Stanley today, a lot of ratings as well, a lot of news to get to. So, Joel, what's doing in the S&Ps?
Only down 1/4 point, less than a 3-point range, all-time high, 57.75. We hit that. Just hanging out on the close. Pre-market lows real close too, 54.25. Yesterday's low, 50.75. That's the highest low ever made in the market. We'll be looking for that for any kind of key to the downside. Crude up 11 cents, struggling in the 52 handle. Gold and silver both deep in the red. Gold down 11.80 at 12.9120, and silver in the red by 1/4 at 17.12. Dennis, good morning to you. We got some earnings and good earnings. Are you surprised?
We got all kinds of stuff to cover here, and it's not helicopters and it's not video games. So we'll jump right into Netflix report there, Spencer. NFLX up $2.22. It's a little bit of a pop here this morning. We got up a little bit higher though last night, so we have leaked a lot of the gains in Netflix. Give us those numbers, Spencer, from that NFLX report.
29 cents was the Q3 GAAP EPS versus a 32-cent estimate. Sales of $2.985 versus $2.97 billion. So they beat on the sales, which is what we learned yesterday is the most important number, according to Andrew Zatlin. They keep on adding subscribers. They added 850,000 U.S. subscribers last quarter, 4.45 million new international subscribers last quarter. So they just keep on trucking, and they keep on adding more and more people, and earnings are good. That's good.
It's going up. Price targets getting raised at all the brokers. We got Pachter even on CNBC yesterday. Kind of bullish. He was kind of bullish. They brought him on as the bear, and he was a bull too.
Was he though?
He was, they brought him on as the bear, and then they were even questioning, hey, you're the bear. Because he says, I see good things short-term. Long-term, he says they're still in trouble because they're burning too much cash. And, Netflix sticks, or Pachter stuck to his guns here on, where is his price target currently?
Let me look for you real fast, but I did see that. Look. So Netflix is spending $8 billion on content, which is actually more than ESPN. If you think about that for a minute, the drag on Disney is ESPN, and the drag on ESPN is that they spend so much money on all this content that they're stuck into these contracts. But Netflix spends more than them. That's what's crazy to me. So let me look for.
Kevin Spacey costs money.
Kevin Spacey is expensive. Michael Pack.
He's going to be. I think shouldn't Kevin Spacey run for real office? He'd win for sure if he ran.
I don't know.
If he ran in 3 years, he'd win, wouldn't he, Joel?
I don't know about that. Throw out the high, throw out the low. That high in pre-market trading is 211. The pre-market low, I don't know why anybody in their right mind would hit this down to 195.30. Texas Linda got a good sell off at 208.34, so that's a good $4 away from now. I'd like to at Texas Linda. I wonder why you picked that as a target or whatnot. You could throw that in the chat. But right now, the consolidation on the 15-minute chart here in the pre-market trading shows the seller at 207.5. You had several highs there between 5 a.m. and 7 a.m. So I call that your intermediate resistance point, 207.50, and then another upside target, your all-time high, your pre-market after-hours high of 211.
Jump over here to the other earnings reports because there's some huge ones here this morning. I'm going to go not to the banks first, but I'm going to go to Johnson & Johnson, J&J, which is making another new all-time high here. At least it was. It's kind of kissing at it now because it's leaking a little bit of the gains. But J&J here reported just about an hour ago. Spencer, details.
Yep, J&J Q3 EPS $1.90. It's a 10-cent beat. Sales of $19.7 versus $19.3 billion, but more importantly, they're raising their guidance. They're raising their fiscal year EPS. It was $7.12 to $7.22. Now it's $7.25 to $7.30. Sales increased as well by about $500 million.
And stock breaking out here, 2 all-time highs, but like I said, it leaked a little bit of the gains here. Joel, what are your technical thoughts here? Johnson & Johnson.
Whoa, Nelly. Look at this move in October. I mean, is this a
big move?
Is this a tech stock or is this a consumer staple? Because we went from 129.05 on September 29th in pre-market trading. We hit 138.90 and we backed off like a 1.5 from that. So I don't know. I mean, is it good enough report to extend this crazy kind of run? I don't know. What I will tell you, there was an old triple top at the 137.40 area. We are holding that as we speak. So if it holds that, sure, we can go up and test those pre-market high. But man, oh man, I mean, someone's sitting on some huge profits, even from the beginning of the month. So the old highs, 137.52. That's my support. Looking for downside underneath that.
Johnson or let's go Goldman Sachs and Morgan Stanley here.
What did you say, Dennis? Reporting. Goldman Sachs? How did you say that? Gold? You didn't?
Well, I didn't do my Goldman. I was saving it.
Okay.
So
right.
I usually only do that. I usually do the Goldman when they do an upgrade or downgrade. So I just same normal Goldman here this morning.
Okay. All right. You want the number of $5.02 versus $4.17 on the EPS. Great number there. Sales 8.33 versus $7.54 billion. Great number there.
This is, every bank has reported great numbers here. And it's just a matter of whether they're going to hold the gains. I mean, if you look, though, and, Bank of America reported, they popped, then they dropped. With JP Morgan report. Did we bank? Yeah. I'm starting to lose my mind here. JP Morgan reported, they popped, they dropped. Citigroup popped, dropped. They didn't come back. Bank of America, JP Morgan have come back. Citigroup has not come back. So if we're taking a cue from that, Goldman, I'm not chasing it up here because I already watched what happened before when you chase these. They open, the real liquidity comes, and they sell them off. Morgan, might as well get the Morgan report because they're going to move together. Give us some Morgan numbers here too, Spencer. Then we'll talk technicals on both of them.
Morgan Stanley, 93 cents versus 81 cents, 9.2 billion in sales versus 9.01 billion. So beats.
So we're popping there too. Morgan's number stands out a little bit easier, $50. I mean, that's your major resistance point. What's the pre-market high, Morgan?
Pre-market high in Morgan Stanley. Dennis, you got it right on the kisser. 50 even.
I should have been out there selling this morning.
50 even. We've come up there twice. First time we've actually hit 50 even twice.
Oh, I should have come in money twice.
Hanging out at 49.65. I will give you a good number on the downside as well, folks. And this is kind of different. Over the last 3 15-minute brackets, you have a triple bottom at 49.39. Don't like to put a whole lot of emphasis, on, these kind of patterns in the pre-market, but you got a buyer there. Recent high of the move was 50.14. So even if you clear that 50, folks, be careful. 50.04. I mean, that's going back to the financial crisis high. So there's a target for you in Morgan Stanley. Good report. Both Goldman Sachs is holding its gains too. That ran into problems at a whole number as well. Yep, 246.06.
Okay, so 246, which was right near the old high as well. So it looks like a little bit of resistance for, I guess 247 was the high in Goldman, but resistance forming up 246 to 247 in Goldman and $50 in Morgan. And I'm cautious just because I saw what the other ones all did when they popped and dropped. So I'm just cautious a little bit there. That being said, Bank of America has come back.
Oh,
JP Morgan has come back. Citigroup has not come back. You think you think that's the one to pop into? Full disclosure, I am long a little bit of Citi, but I'm hedged with JP Morgan on it. What are your thoughts here on Citi possibly popping back? I think Kramer was talking about this last night too. I mean, Kramer talks about a lot of stuff we talk about. We'll talk about some stuff that Kramer talks about.
What I like about this Citigroup is you got a gap fill with that low at 71.37. Hey, Dennis, I guess that guy sold that 40K right near the low.
Yeah, yesterday. That's it. I actually bought the open yesterday in Citi. But the scalper blood in me. So it opened right at the low. And I was like, it popped up with 30 cents, and me, scalper blood on my trading, and I took the gain. Should have held on because it went higher than that, but I did buy that open.
70.91, that fills your gap when we jumped up on the 26. So I like it. I mean, it holds that low there. It was a good report. It got killed if someone took profits. Maybe look for a 50% retracement here from the high of the move, which was 76.14. You had a 5-point drop. Let's get us back in the 73 handle, 73 and a quarter, 73 half is the target. But as long as that low holds from Friday, I like Citigroup to the north as well.
Let's go to the HOG, HOG, trading down in the pre-market. It got a little bit of a pop on the initial report there. Didn't last long there. This trend is not your friend here on this. And if this stock takes out those lows around the 45.50, 45.60 area, Katie bar the door, as Joel would say there, because I think you'd be in a world of hurt. We're trying to hold those lows. I'm talking about the lows from September and October, but that is a huge level for HOG, and it needs to hold that. Spencer, what are the details?
Yeah, Harley-Davidson Q3 EPS of 40 cents versus 39 cents, so they beat by a penny. Sales of $1.15 billion versus a $953 million estimate. So that seems like it's good. They beat on the EPS barely, and they beat on the sales. They also reaffirmed their shipments for the fiscal year. That's 46.7 thousand for the quarter, 46 to 51,000 for the quarter is what they're going to see there, and then 42,000. That's what it was last year. So they're reaffirming their shipments, and they're beating on the guidance or beating on their earnings. So that seems like a good number, but I guess not good enough.
I'm scared. No position on this yet. Thinking about taking a position though. If it cuts out through the 45.50, that's where I think you're going to have some opportunity there. So we'll have to see if 45.50 can hold, but I don't know, Joe. What are your thoughts? Been hanging there a long time.
It's not only it's been hanging there on the daily charts, it's been hanging there on the monthly charts as well. So there's a lot of price history here. The 45.5 level, if you get anywhere near 47, you got a double top there. Trading in the red, driverless motorcycles, I just don't know where motorcycles are going to fit in here in the whole driverless. The whole
driverless motorcycles.
Yeah.
That's a cool idea. I don't know if it's a big market for driverless motorcycles.
I don't think so either, man. I don't know. I'm just worried about this.
Great point.
Fundamentally, technically as well. So that's my thoughts. Look out below 45.5.
Yep. I think so too. I think this is a great opportunity. This thing starts taking off 45.5. I think it could be down. Let's even go a little bit further. We got to go way out on the charts. If we do take out 45.5, where would our target be? Maybe that low, maybe back to July of 2016, like a 41.63.
Exactly. It won't go there overnight, but boy, oh boy, I think when you have that many monthly lows in an area, the institutions are leaning on it as well. So that's your June of 2016 low, 41.63. And the only time this thing it only pops is if there's rumors about a buyout or something. Man, oh man, I just can't see someone going after this, this company. Nope, not at all.
I think there's a good opportunity below 45.5. So I'm with you here, Joel. I think we're both looking a little bit bearish on this one if it takes up the 45.5. But support is support until it's broken. So that's what I always say is, you could have been trying to short that 1, 2, 3, 4, 5, 6 times. It hasn't worked yet. Wait till it actually breaks it. I know people like to anticipate, get that extra 30, 40 cents, but sometimes that can be costly as well. So I like to wait till it breaks it, give me some confirmation, and then, that's the play as it's breaking through the support. Sometimes it goes fast, though, especially on earnings day. So you got to be quick if it takes out that 45.50 level. Jump over here, just the other earnings plays. UNH, we had a report here this morning. It's trading up in the pre-market. I believe there's also some analyst commentary from Bank of Montreal. They put an outperform on it with a $250 price target. That was gutsy because that was before the report. Anyways, UNH details. Spencer.
UNH Q3 adjusted EPS of $2.66. That's a 10-cent beat. Sales of $50.3 versus $50.35 billion. So just about where I need it to be for the sales.
$200. That is absolutely huge. I don't know if it gets there, if it has the gas to get there, but if it does, that is where all the resistance is.
Yeah, the tricky stock here with everything that's going on in Washington. So the fundamentals can change very, very quickly. As you see, you had a washout day on Friday when you went to 186. Currently just trading off your pre-market high of 96.62. Not that level, but just above that. You had a high at 96.43 and 96.07. So this hangs out, holds 196 even, maybe take a shot at that $200 level under 196 to see some downside action. The close from yesterday, 193.20. Don't know if we'll get that low, but holding 196 is critical here for UNH.
I think we're still waiting on CSX. Did we get the CSX report yet?
I didn't see it, but
I didn't see across it either. You're usually around 8:30, so it's just kind of hanging out. It was trading up in the pre-market. It was actually trading last night. Did we get it?
I'm seeing 51 cents on the EPS.
Okay, so maybe we did get it.
51 cents versus 51 cents. So
it looks in line.
Yeah.
All right, stock just kind of hanging out. Doesn't know where it wants to go. 53.23 offered. Best bid is way down to 52.06, so it's wide right now. Only traded 10,000 shares. It is leaking from where it was trading earlier in the pre-market, and actually was bid up last night as well ahead of the report, and it's giving back those gains. So it looks like if this is the report, that's a 51-cent number. Maybe not good enough.
Pair highs just under 54 to take a look at, 386 and 394 from Thursday and Friday. That's your resistance coming back on the downside. Yesterday's low, we're still 40 cents above that. Actually, two lows at the 52.70 area. If the fact that can hold, I'm looking for 52.02. That's your 4-day low.
A couple other ones, smaller ones, if you want to talk these, but we're getting into earnings season, so we won't be able to cover them all. We have Progressive Report, PGR, CMA. There's a few other ones as well. Tonight, we're going to get IBM. We're going to get Interactive Brokers. So we're starting to get in the heart of it. So and once we get into these days where we have 50 or 100 companies or 200 companies reporting, we won't be able to cover them all. So in chat, let us know if there's any company that you want us to cover, and we will try to jump to it and get to it. There's a few other stocks on my list, though, that I do want to cover before we move on here. One last earnings stock, Sonic, SONC, which reported last night. That stock is trading down here in the pre-market, the burger chain there. Spencer, how'd they do?
Sonic Q4 EPS, adjusted EPS, 45 cents. That's a 2-cent beat. Sales of 123.6 versus 126.9 million. So a slight miss on the sales number. Q4 comps down about 3.3%. They see their fiscal year comps growing between 0 and 2%. So comps down, not great, but for the fiscal year, they're looking okay. And the earnings was mixed.
This stock popped on the report, and it's given it back and is now trading in the red. So that's not good news. And I look at those comps and you think, who's jumping in buying a stock when the comps are falling? So it's a big number that people don't talk about enough. And when the comps are coming down, I don't really want to be part of that. It's not growing.
Not only that, but that pretzel dog that they put on the commercials. Could you eat that thing? You know what I'm talking about?
Sounds okay. Pretzel dog. Pretzels and hot dogs mixed together.
Oh, man.
Sounds
you know what I'm
good.
talking about, Spencer, on the commercials?
I mean, I don't, but I'm assuming it's just I'm assuming it's just a pretzel bun. Is that fair to say?
Pretzel bun and
that's normal. Sounds good.
Wendy's has that too. That's normal.
Okay. All right.
The pretzel buns are cool now.
You're hanging on to a very, very important support level as we speak. Your pre-market lows right here at $23.99. You got two lows right under that. Let's call $23.70 your support. One other of $23.50. I mean, got to hold in right here to rally, go back and maybe try and get to the close at $24.80. But a couple lows you're contending with. So this needs to turn around quickly off the open under this 23.50 level. Big, a lot of air down to the low of the move at 22.11.
GWW, Dr. J wants to know about. Did they report? I'm assuming they may have because it is trading up here in the pre-market.
Yes, they did. Q3 adjusted EPS of $2.90 versus a $2.56 estimate. So a good beat on the EPS. Sales of 2.6 versus 2.65 billion. So a slight miss there. They're also narrowing their guidance, not lowering, just narrowing. It was $10. This is their fiscal year EPS. It was $10 to $11.30. Now it's just $10.40 to $10.90. So they're just narrowing that fiscal year EPS.
This is a big move for 4 days for this thing. This thing got killed. It bottomed there at 166 on October 11th. In the last 4 days, it's got all those losses back. Plus, now it's above that level and breaking out on the good earnings report here. So, good job to who's ever been buying this last 4 days. 185 now in the pre-market. Best offer is way up at 189.90. And the one thing is, if you can get above this whole 185, 186 area, it actually starts to open up, because you really cascaded down back in early 2017 when it went from 260 down to 180. So you start getting back up to that area, stock could see $200 again.
I don't know. This is a very, very, very tough chart to look at and interpret. You did have, I don't know how many highs. You had 6, 7 highs just under the 183 level. So I think I'd be more apt to pull back to that old resistance point, perhaps a try long. As far as the upside goes, I mean, you did come down very hard in 2017, but if you're looking for an upside target, 193.47, that was your high in May. You could probably look on your daily charts here and find some other intermediate levels here, but big fall and trying to get it back on a couple days, just hanging out here at the highs of the pre-market session.
Cajun Juan wants to talk PCG, and we have not talked about this on the show. We've had it on our list to talk about. For some reason, it's just slipped through the cracks, and we haven't been talking about it. Stock's been annihilated for 3 days. Yesterday, it found support at a big psychological level. You can say 49.83 was the low, but I'll call it $50. It finally bounced and had a nice bounce in the afternoon. Why is the stock getting killed? Well, they might be liable for these California wildfires. So they're saying downed wires, and PCG, we don't know, if they're going to have to pay some of this bill for all this damage or not. But, we saw this, with the reinsurers and the hurricane, and they got absolutely annihilated. A move that was way out of, the ordinary for them. And you saw stocks like, AHL falling 30% ahead of the hurricane. Hurricane wasn't that bad. Damage wasn't that bad. A lot of these stocks did come back. Do you think that's a possibility with the stock like PG&E here? PCG was a $70 stock a week ago. Now it's $53. Is there that opportunity that maybe they're not going to have to pay as much as everybody thinks? I mean, this is such a huge move for a stock like this, because this is a utility company that typically doesn't move much. You're talking about a stock that took 2.5 years to go from 50 to 70, and then it took basically 2.5 days to go from 70 to 50. Do you think there's an opportunity here? Because I'm kind of licking my chops a bit. I haven't pulled the trigger on this, but I like the bounce off 50 yesterday, and I think if it was to come in and give me a second shot in the lower 50s, I might want to throw this one in the investment portfolio, because I don't know if they're going to owe as much money as everybody thinks they might.
I mean, it hasn't even been determined what the cause is.
Yeah.
I mean, there's
conclusions here.
Yeah, I mean, that's the market. That's the algorithm. I mean, and this actually started. It's funny because the wildfires have been going on longer than 3 days, but the street caught wind of it on last Thursday. You got an excellent point here at the, if we take out under, I'd give it more than that. 49.83 was the low. I'd give it a little bit more room, but once again, this is like your CMG or something that's under scrutiny and has bad news. You don't know if the news could get worse. And then on the upside here, this thing ain't going right back to $68. There's a lot of people that got plowed on that, and there's going to be a lot of overhead supply. So even if you do get, let's say something conclusive that, it was started by, a forest fire or something like that, this thing has got a lot of overhead supply. I don't know. What's the yield now on it, Dennis?
3.93. It's still not as high as some of the other ones.
No.
So, and it is a dividend play. I mean, Southern is the biggest one that I've owned in my investment portfolio for a few years here now, and it still yields 4.54% up to $51. When I was buying, it was 5%. I always like these dividend plays when they start yielding 5%. I always like my AT&T when it's over 5%. I always like my Verizon when it gets over 5%. I always like these dividend plays when they're over 5% because I feel like it's worth it then. Look now, and you see PCG still 3.93. There's some risk. There's major risk here right now. That being said, though, I like it from yesterday just because the 50 is a big psychological level and it had a hard bounce off there. And I think sometimes what happens is these things, can get pesky, and sometimes they retry them eventually. And I know it's up here at 54. I'm not pulling the trigger at 54, but if it came back down to the 50, I might try to take a shot.
And this is not new to PCG, Dennis. I think that our subscribers should take a look at some of the history. This company's had some problems in the past with some liabilities.
Before?
No, not fires. Well, actually, there was one fire in Nevada that they ended up paying, I think, $750 million for, and then they've had some other things in the past. I don't know if they've ever filed for bankruptcy, but do a little fact checking on this one before you jump in. This is not their first experience with being liable being liable here. So definitely headlines.
All right, just quickly, I'm just going to jump over to the imbalances because we just got them hot off the press. Ford, 201,000 to buy. GM, 66,000 to sell, though General Motors is trading up all morning here. A little bit with Kramer last night. He was pumping it, and it trade up actively to the 46 area. Full disclosure, I did short the Kramer pump there up 46. I just think it's a big psychological level there just for a scalp trade, so I am short GM here right now. Looking here at GE, 114,000 to buy. Look at General Electric with a buy imbalance here. And believe it or not, I got a little long trade on in GE here right now, too. I don't know why. I'm long in my investment account, but I like the candle from yesterday for the 2-day move. You know how I like my 2-day moves pulled back here a little bit this morning, but I feel like there's a little bit of life for a little bounce in GE. Not going to stick with that one long. But like I said, I still have my long-term investment. The trade part here is just a 2-day trade, though. Jumping over to AT&T, 35,000 to buy. Bank of America, 93,000 to sell. Citigroup, 55,000 to buy. Coca-Cola, 43,000 to sell. Alibaba with its buy and balance every single day is 34,000 to buy this morning. A little smaller than normal, but it is early here yet. Anything strike your fancy there, Joel? That I was just.
What about Square? What about Square?
22,000 to buy. I've got Square again. I hold it long every day. I buy the close, sell the open pretty much every day. It's working. You got to do a trade. Once you do a trade and it works a couple of times, you got to keep doing it until it stops working. That's what I said.
Well, it had its down day on Friday when it was unchanged at 32.81. So that was the down day. But then just let me count these. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 days in a row without this trading in the red. 2 days where it was unchanged. What I will say about this issue, someone's hanging out here at the 33.20 to 30 level. Your last three highs, 33.16, 33.22, and 33.30. So, I mean, you're finding sellers in the same area. This is the first time you've done that since you had a little pause at just under $31. So you do have someone trying to work out of a piece here at the 33.30 level in Square.
I've got a question here from Spinner. Actually, Spinner, not even a question. He's just talking about Netflix and saying how muted the move was with the option guys expecting $15. The straddle sellers win here again. Let's bring Nick into this conversation. Let's go grab Nic Chahine because I want to talk to him about this as well. But I agree. These straddles, if you're right in straddles, especially in this low volatility environment, you've been making money overall because there's a lot of times you get it right. I mean, Netflix is flat right now. You just take it in 15. You're getting max gain right now, $15.
$15 on what? I'll buy it.
the Netflix straddle, and I didn't price it up. What Spinner saying from the chat was 15 points going into this report. It is flat here right now. So those option writers, Nick, those option writers are winning again.
Yeah, well, they rarely lose.
That's not right. You got this figured out. Nick has this figured out. That's why he's your premium option writer over here. He just breaks in that premium and gives everybody, all the people who want the lottery tickets, he gives it to them. All the people who wants insurance, he gives it to them.
No, not all the people. Only the ones that have not done a lot of homework.
Okay, so you're shorting the people who don't do their homework.
Yes, that's why I watch CNBC. Because I watch.
It gives you all the ideas. You short all those.
That's what I'm playing against. So the Netflix thing, I don't like the fact that it's a muted response because usually, if they got to 210 I need to see them get there again during the day. Otherwise, there is some downside risk in the short term.
Oh, so sometimes you get nervous when these things give it all back and then, come to
Well,
flat.
Well, if they got everything they wanted and then some, if the magic number they were looking for was the actual new people they signed up, then why aren't they just taking the ball and running with it?
But this has been the theme this earnings season, that stocks have run up substantially into the reports, reported pretty good quarters, and then went down. I mean, we have saw this happen. I feel like it's almost every single stock has done this.
Well, give me names because I have
Costco, which was actually from the last.
Here's the difference. This is a Momo stock. So momentum stocks usually when they gather steam, boom, they're gone. They don't just linger just because they're already priced in to move. That's my opinion.
We haven't had any Momo reports, but the first Momo is Netflix, and it's doing the same.
Yeah, that's why I look for it. I thought this week's outcome all depended heavily on the response to Netflix today. Because I'll give you an example. I can't remember, last year sometime we had an earnings season that was incredible, and this one opened the door. It has a huge mood up, and then you saw Facebook, Google, they all moved up big time. I remember it's like 12% move on giant stocks. It was insane. But this one set the tone. So now this one is not that negative, but it took away the upside potential from a huge burst on earnings just because there's now a muted response to a good report. Whereas in the banks, where they are good values, this morning they're moving well just because we had good reactions on Morgan Stanley and Goldman Sachs.
But we had good reactions in the pre-market on JP Morgan and Citigroup as well. And then when the regular session came in, the sellers came in and they crushed these stocks back down.
Perhaps, but this feels different.
Does it?
Because, okay. Maybe because the Citigroup took the negative spirit out. In other words, they got their time to play and they took it out on the first week of earnings on Thursday and Friday, which were Citigroup. It included Bank of America, which I went long on that day or the day after, and I booked the profits yesterday. I sold naked puts in JP Morgan, and I booked some profits yesterday. So those are value. So I could write against value because they're trading almost at book value. So if I end up owning the shares because the price went below my sold puts, not a big deal. I'm buying some value. Whereas
So you do write some naked puts sometimes. You don't cover it.
I do, because if I don't mind owning Bank of America at a level, then I would sell puts. If I don't mind owning JP Morgan at a level, I sell puts. However, I don't sit naked puts over time because we all know that we could have black swans. And if you remember the flash crash, if it's cheap to buy, I call them sacrifice puts. Say if I sold a 2019, I'm using a long-term example, put in something, whatever, Boeing, which almost never falls.
Okay.
I don't mind spending 10 cents to protect the next 6 months. And I could buy similar puts or higher, shorter in time, that could make me sleep well knowing that if prices go to zero, I lost nothing.
So if the protection is cheap enough, then you cover yourself no matter what, even if you don't mind owning the stock. And exactly. What price did you sell the puts on JP Morgan? You said you just sold naked puts on JP Morgan. What price?
I don't remember off the top of my head.
You sell too many puts.
No, because I discussed too many things. It was I sold the $85 puts.
And what'd you get for that? And what's I'm just trying to set it up here.
Sure, I got 70 cents. It was a blended price. Started somewhere around 75 cents a share. So if I sell 10, that's $750 goes into my account. If it falls below $85, I own it at 85. I don't have to give back my $750 or anything. So worst case scenario, I end up owning share at 85. What is it trading at now? 97, almost 100. So what is that air math? Joel, where is it?
Cheap.
What time frame?
This is January. So the good thing about it is that the event is gone, and with time ticking and such a low volatility stock, I could buy back those premiums for, nothing in just a matter of time. In fact, now I can buy them back for like 54 cents. So for an overnight trade, I could have paid for a nice car on an overnight trade.
Nick, with volatility so low, are you getting, are you getting the premium here in selling naked puts?
No, the premium is challenging. That's why I choose carefully what I'm selling and where I'm selling it. That's the problem with low volatility, because you end up stepping closer to current price to get the entry point that you want. And I usually like a certain delta. I usually like a certain level of risk. So I like to tip the odds in my favor. So when you buy a stock, one can argue that it's 50-50 for you to be right or wrong. It can go up and can go down. You can do homework to skew the odds in your favor. Well, with options, you literally can calculate the odds in your favor by how far out from current price you want to write the puts or the calls. So if I want to have an 80% chance of success, I go down the line to find an 80% chance line. And if it pays me enough premium, I sell it. And especially if it fits my thesis. But in this case, like you said, VIX is so low, so you can't step too far. Higher price stocks make it easier just because they have bigger premium, but the mistakes are also bigger. And more importantly, if you're writing naked, then your margin requirement is very high. So you have to have a good size account. Otherwise, you end up doing spreads instead.
Nick, Apple here got I believe it was an upgrade yesterday or a price target raise. And I've been keeping an eye on that 50%, 157 area, close Friday, 156.99. And then good old Key Bank upgrades it from overweight and off to the races here. Did that one catch you off guard? I know you like to play Apple kind of like in earnings and then kind of cash out and sit the event out and see what happens. Did that upgrade catch you off guard, or did you have a little Apple call strategy in your back pocket?
I did not have a call strategy. I did talk about one with a few friends of mine who did. But I did play it indirectly via the Qs. So I had credit put spreads in the Qs, and I was long some calls in the Qs, which I still left long just because of the potential of Netflix. So sometimes I play the earnings indirectly. So if my thesis was if Netflix runs, it's going to cause all the mega techs to run. So boom, I can jump into the Qs and diffuse my risk. I won't profit as much 1-to-1, but then I'm not stuck out naked out there. So Apple, what puzzles me is, do you really need someone to write it up as a buy? If you don't know the fundamentals on Apple and you wait for somebody that tells you it's a good place to buy it, I question your judgment. So the fact that they bought it, something is going on with Apple. The open volume yesterday was pretty big relative to days before it. So there's something else at play, like some other big person buying into it, or company buys. Did they buy in the open market? I'm not sure. Are they in? They can't buy before the earnings. I'm not sure the rules, but it's above my pay grade. All I need to know is that long-term, mid-term, Apple is an ATM, and I go long it on dips. However,
was that the opening print, or were you looking at an opening bar, or what?
I'm looking at 5 minute. The first 5 minutes had big volume. I can point it out.
Okay.
But if you look at the 5 minute chart, you'll see a big fat candle compared to the day before that. Sorry. So it just stuck out. Also, the day before that, we had that funky spike to 158 or whatever. I don't know if they had fills at that point, but out of the blue, boom, it was like $2 spike during the day, early in the day. So there's something else going on that I don't know about. However, this is not what's going on with Apple as far as fundamentals. Now, I do have concerns. I've raised them here before about Tim Cook's leadership. So far, it's been less than exciting to see Apple. It has so much potential, and they can't seem to get the, what they call the next big thing. They keep changing colors and things like that. And the release of the iPhone, the way they did that, even the Apple fans didn't like how he did that. So, a lot of question marks around the leadership. The company's still on rails. I've read an article years ago. I said it will take a special kind of idiot to ruin Apple. He might not be this biggest star CEO out there, but I don't know if he's an idiot. So it's a boulder that's rolling for now, and it's going to keep rolling until it gets messed up.
Nick, what about IBM? We're going to hear from them tonight, Big Blue. This is a stock that has been in the doghouse for a long time, and I'm talking like 5 years. We got up to $215 back in 2013. We're now $146. We had a nice little run in 2016. Gave it all back in the beginning of 2017, and it has really had a rough year here, Big Blue. It's come back from the lows about $6 or $7, maybe a little run up ahead of the report. Are you nervous about the IBM report tonight? What are your thoughts going in?
IBM, talking about leadership.
Or lack thereof.
Yeah, Watson either is being muzzled on this one, or he's been screaming, change my CEO right away. So I don't like what they're doing or not doing. I point to an Apple IBM co-CEO interview years ago that I listened to. I was like, what are they talking about? And I'm an engineer. I should have understood what they were talking about. But they were just talking such general terms. I was like, this company is completely lost. They have no idea what they're doing. So I know it has a lot of fans out there. But first of all, technically, something's got to give right here. It had upside potential for a while, but it's been 148. Come on, get through it so it can get to 152, and it can't. So now the trigger is here, earnings. So either 142.5 or 152 probably in the next few days. Easy to say around earnings, right? But this technical squeeze was happening anyway, so earning is just going to nudge it one way or another. Now, fundamentally, I don't like what they're doing because they're kind of like a startup with just a whole bunch of money, and they can't figure out what they want to do for a living. So they need to find a direction there. And so far, I would not own it, and not to mention that I don't know if they need to disclose anything about Buffett, because if you remember, he dumped half of his shares only because he couldn't dump all of them at the same time. So when is the second shoe falling? I don't know. So I do not want to write puts in that one.
Nick, what part of California are you in?
Southern.
Okay, so you're a little ways away from what's going on with the wildfires and stuff, but what is your strategy for PCG?
Well, first of all, we did have wildfire in Southern California. They were bird's eye close to us, but luckily we're not nowhere near them. So PCG, I discussed it yesterday. I wish I could pull up the chart right away. But anyway, this is real fear as far as business perspective. There is definite, there's a big possibility of liability there. So talk about a knife that is dangerous to catch, because there are legal issues that you can't see on a chart there are lives at stake here. And if they're actually at fault, and it's happened before, and I think someone educated me on it yesterday, one of my members actually in a chat room, and they said that there was a ruling that went against them, and is that a precedent or part of or a continuing situation of negligence of some sort? I'm speculating. I don't know the issues, but I know that there's enough for me to worry about. And if you look at the volume with which it's falling here, is huge. I'm looking back years, and I can't see the same amount of volume. So this is serious stuff. 50 looks like a nice floor until it's not. So I would get educated on the issue from the legal standpoint too before I decide whether it's a good business proposition to go long it here.
Nick, we got some questions here about some Chinese solar stocks. Let me know if you follow any of these. Johan Smith is asking about JASO, JKS. They're all going up. I don't know if you follow these on a fundamental or technical basis. Any comments on these?
I don't, but go long solar because I'm getting solar from me. So it is, these are volatile stocks, obviously. So you have to know the ins and outs of them. You also have to know the fact that they're affected by regulation, especially if they're Chinese. Then China regulation is not as stable probably as here. They have had sharp rises before. Back in August, the JA Solar, it spiked and then fell from 840. I don't know what caused it to fall. I don't know what brought it up there, but it seems like it's ramping up another leg higher, and it's done this quite a few times before. So here's the thing. If I'm already long the stock, I really don't have a visible reason to jump out of it unless there's earnings coming or something like that. But jumping long after a spike is not that smart. But this one could be early enough. I mean, it's not that extended compared to the last spike it had. So from a technical perspective, I can't blame anybody that wants to be on board this. It's definitely not a good place to short it. Let's put it this way. If you do want to short it, I would use debit put spreads, for example. This would be the safest way of doing it. And if you do it with time on the clock, meaning you go out to say November and do it close to current price, okay, so you pay half the width of the spread, which sounds expensive, but you have a chance to double your money with time to change your mind.
Nick, real quick, price line here. I know we said we're going to let you go. Bumping up, trying to fill the gap. I know earnings are coming up. Nice run it got killed after last earnings report. Any low risk, high reward strategies for Priceline?
Low risk with Priceline. Not a magician.
Okay.
Well, technically it is frisky, and this neckline where it's at right here could be the door to get to 2000 again. But if it does fail, it's going to get to 1850. So keep those two numbers in mind and play within those two ranges, meaning if you want to be long, I would do a debit call spread somewhere around the 1950 area. That would be cheap enough maybe. But it is high price, so the premiums are high. So you're going to pay up for the price to play. But stay within the expected ranges, because otherwise you pay the premium that sounds cheap, but then it fizzles because it doesn't get to your level. Unless it's a complete lottery ticket. So that's the way I would play it. They do usually report earnings early in November, if I'm speaking from memory and I'm correct. So you might want to time it there, just because if I buy a premium inside the earnings week or later, then time is not as crucial. It's not as violently killing my theta. So it holds up better because of the event.
Nic Chahine has been on the line. He is the author of Create Income with Option Spreads. You can go to marketfy.com/create income with option spreads to learn more about his service. Nick, as always, thanks for joining us.
Thank you. And I look forward to talking to you next week.
Thanks, Nick. Jump over here to some of the ratings. First, I want to talk about a ratings change from yesterday, though. And we had Bluebird Bio caught an upgrade from, I just got to find it on my sheet. They got upgraded at Evercore, and they put a price target of 152. These price targets are typically for 52 weeks out. Anyways, Bluebird Bio just decided, well, maybe we're just going to go straight there yesterday. And it gets all the way up to, so basically on this upgrade, it goes from 132 up to $144. So it gets all the losses back. I guess that's all you need when you're one of these smaller biotech companies, is one analyst to get behind it. And boom, it's right back up here at the highs again. BLUE. Joel, technical thoughts as it gets, a little love from Evercore and just flies.
Yeah, well, trading up in the pre-market as well. And this is a real critical level. You hit 143.5 and you backed off to 120 quickly. Now you're right back here. 143.40. That is your that was your high from yesterday with a 43.30 close. Trading up on very little volume, but I'm just going with the close here. We stayed green above 143.40. Greater things to come on the upside. What's also interesting about this area is before this fell off a cliff in September 2015. 143 was your high back in September. So just 143, just a relevant number for Bluebird Bio to determine more upside or downside.
Sticking with the biotechs, the biggest gun, Biogen gets an upgrade this morning from Stifel to buy. Spencer, I don't know if I saw a price target on this one. Maybe you could hunt it down. But BIIB is trading up 7 points here in the pre-market. I own this one in my invest portfolio. This is as high as it's been basically since it crashed back down in 2015. So we're starting to move here now on Biogen. Obviously, I like that because I'm long the stock. Did they give a price target, Stifel?
I'm hunting it down right now. I know their prior target was 290. I don't know if they updated it.
Yeah, so I'm pretty sure they jacked it because they upgraded this to a buy as well. So I don't think they put them a buy if they didn't put a higher price target. Up 7 points here. Joel, breakout for Biogen, BIIB.
Yeah, I mean, you could call it what you want. 344, that's your pre-market high. You've backed off $1 from that level, trading at 342.92. That really blows away the former high. Nope, former high of the move, or the high of the move. It's 344.37. So right there's your target. Did quite get there into the pre-market. I don't know. I think I've seen with some of these biotechs, they might give a little bit of it back. Certainly, Bluebird Bio was not an example of that. But big number, 344 up to the high of the move at 344.47. Netflix has gone red here, Dennis. Not holding on to those gains. We had talked about it, now in the red by 43 cents at 202.25. Great sell to Texas Linda at 208.34. You buying this on a pullback, Dennis?
No, I'm not a Netflix. It doesn't fit my value criterion. But I tell you, if you've been buying this stock on a pullback, you've been right. And if you've been sticking with these growth stocks the last couple of years, you've been right. I've been caught in a few value traps. DC talking about one right now, which is Spirit Air, SAVE. I've been in this one here. I was buying it because I like the value. Well, it was a value trap for me because I bought up at $39 in my investment portfolio. It's coming back here now. It's trading 36 here this morning. They got some good numbers. Spencer, give us the details on Spirit Air. What's got this airline flying?
Yep, let me pull them up real quickly. So SAVE is the ticker, which always
great ticker.
I don't like it. Anyway, they reported their total revenue per available seat mile for Q3 was estimated to be down around 6.5% year over year. So this is RPM is the metric if you see it anywhere. Revenue per available seat mile. September RPMs 1.77 billion versus 1.67 billion at the same time last year. And then annual ASM is the annual seat mile, 2.25 billion versus 2.07 billion year over year. So better numbers year over year in terms of revenue per seat mile.
Those metrics are all massively confusing to me as a technical trader, but I'll just tell you, they're obviously loving those metrics there. It's up 10%. It's hard for me to get excited about this because it seems like every time Spirit Air gets a little bit of a pop, it's met with more sellers. Lots of overhead supply, including overhead supply probably from somebody like me.
$37. That's just your pre-market high is right here now at $36.82. The reason I like $37 was on its way down. You had a series of 4 highs. And those 4 highs actually 3 highs between 36.79 and 37.08. Now, if you could get above there, things open up to 38.42. But got to imagine there were some sellers there 3 days in a row in August. They'll be back here this morning, especially since the thing closed way down at 33.47. And if it gets to 39, Dennis's 500 shares might even be out there.
Probably. HOG is broken at Tech or DC, letting us know HOG has cut through the 45.50 in the pre-market. I will tell you though, I always say it's got to be during the regular session. So just because it breaches in the pre-market isn't good enough. I want to see it always breach it, usually in the regular session when the real liquidity comes in. I'll tell you, somebody is selling and somebody is buying HOG right now. There's an iceberg order sitting at 45.45, and they are smacking and smacking and smacking it. It's not moving. So you got a big buyer that wants to buy it. You got sellers that don't want to sell it right now. So it's on a little bit of a comeback trail. It actually gets got down to $45, so it's bouncing back. But that is the key level, that 45.50. It takes that out in the regular session with some conviction there. Could be an opportunity.
All right, S&P's down only a stick. Dennis, I want you to know the 9-day average range in the S&P is now in the single digits, 9.25. So
that's not the average range. That's the range, right?
Well, that's over the last 9 days. That's been the average.
Oh, because I just saw a stat that we only had an 8-point range the last 4 days altogether.
Okay. All right. Well,
right?
I'm going back 9 days, so maybe
Let's go back the last 4 days. We've been in an 8-point range, somebody said, for 4 days. That's like used to be a 40-minute range. It's a 4-day range now.
Well, bodes crazy. Well for the market, right? Low volatility.
Yeah, they like that. These long-term investors there, they like that little low, volatility. As a trader, don't like it.
Spencer, 9 a.m. here in Eastern Standard Time. Want to wrap things up and preview tomorrow's show.
Before I do that, can we get some imbalances from Dennis?
Sure, let's go take another look here. Right. So Square has grown, 106,000 to buy in Square. Our buy and balance guy still there every single morning, it seems like. Ford, 208,000 to buy, despite trading a little bit down there. Positions in both of those stocks. Alibaba, 62,000 to buy. That guy's growing a little bit there. Alcoa, 103,000 to buy. That was getting bid up last night as well. Not sure if there's a headline there. Citigroup, 46,000 to buy. The banks are all starting to go up on these Morgan. Morgan is now back up near the $50 area once again. Goldman, they're showing more life here again, not leaking at all. So, you got to be cautious here if you're playing those things short because they just look strong here in the pre-market. General Motors, 59,000 to sell. Not seeing much else. They're pretty small.
GM, that's interesting because I saw a headline that they're going to be testing self-driving cars in, of all places, Lower Manhattan, which if you've ever driven in Lower Manhattan, it is a freaking nightmare with a driver. So I can't imagine what that'll be like without a driver.
I got one more for you too. SNAP, 217,000 shares to buy in Snap. So their Snap buyer seems to still be kicking around there too. Had a little bit of an ugly candle yesterday, bouncing back here this morning with the 217,000 shares to buy.
As far as tomorrow's show, we're going to have another reader, another guest who's come to us from a listener, and that is recommended by Flack UK in the chat. Tom Thornton will join us. He's from Hedge Fund Telemetry. He will join the show tomorrow to give us his thoughts on the market. But that's it for us today. If you want to catch our show again, you can do so on our podcast on iTunes, SoundCloud, and Stitcher, or by going to youtube.com/BenzingaTV. Have a good rest of your day, folks. We'll be back with you on Wednesday.